other currency pairs. Let's have a look at the British pound here. Probably weekly chart is for us where to start. And last week we were talking about the weekly Shimoku cloud. I told you that this cloud is rather heavy at the chart of the British pound to US dollar, and indeed this cloud did act as a resistance for the British pound. We also can see that this cloud corresponded with the psychologically important level of 1.30. The bulls in GBPUSD didn't manage to get above this level as well. So we saw that the market kind of recoiled to the downside from the resistance line, which may be drawn through this year's highs of the pair. The pair is still above the high of January, around 1.2705, and there is also support of the 50-week moving average, which is also located near 1.27, just above this landmark. So I think this will be an important support if the British pound is able to stay above this line. Then consolidation is expected. I don't think that this week we'll be able to get above 1.30. I think that 1.30 is a ceiling for the British pound, and if the currency approaches this level, I would think of closing my bullish positions. But below 1.27 certainly will be very vulnerable for a decline to levels around 1.2550, 1.2515. So it may be a leap to the downside here. Let's switch to the daily chart, have a look at the pivot levels here. The weekly pivot is located at 1.2873, and we are currently trading below this level. The pair is also approaching the support lines formed by the daily moving averages. We can see these lines here. The brown one, the 50-day moving average at 1.2730, and the horizontal line 200-day moving average located in the area of 1.26. So these are further levels to have a look on the downside. 1.27, 1.26. Easy to place oneself with these levels. Fundamentally, the British pound's mood was kind of worsened by the terrorist attack in Manchester, which happened last week. And this terrorist attack affected opinion polls, which are published in Britain ahead of June 8th general election. I can remind you that British Prime Minister Theresa May wanted to strengthen her negotiation position in Brexit talks. So she called for a snap election on June 8th, and she was hoping to solidify her power base. She was hoping that her Conservative Party will have a big lead over the opposition Labour Party. But this latest developments showed that the lead of Conservatives over the Labour has narrowed, and this leads to uncertainty. The market has already priced in Theresa May's victory in this snap election, and when we have these opinion polls data which tell us that her victory is not that certain, or it might be a really difficult victory, that it won't really solidify her position as it was expected. Of course, the British pound is suffering and is testing lower levels. I think that Theresa May will still manage to win this election. We can judge from the general picture of what is happening in the UK. She is still the biggest leader in Britain right now, the person who is taking responsibility of this Brexit process. So I think she will, and I think that this decline in the British pound looks more of the temporary event. We see that the market players are reducing their bearish bets on the British currency. So slowly but surely the British pound should be recovering, and on the declines to the area of 1.27, I think that the buyers should appear, that overall trend should improve. But as this week we won't have some answer on this election question, I think that our target should be conservative. Our targets on the upside should lie around 1.2970, 1.30. If we look at the British economic calendar, today, Monday, is a bank holiday, and the most important things I think will be on Thursday and Friday. On Thursday, manufacturing PMI is up for the list, and on Friday, it's construction PMI. So flash data for British economy always will be quite welcome by the market. So last week there were some negative pieces of information about the UK economy, and analysts have once again started saying that Brexit is finally affecting the UK, and it is very interesting thus to have a look at these manufacturing and construction PMIs this week. If they confirm the negative picture, then I think that it will be another signal for the market that the move in British pound to the downside may be lower, and we may test 1.26 mark. If it is good, then well, all the reasons for 1.27 to hold and to make the market once again focus at 1.30. We remember that 1.30 is a really hard not to crack for the market. There is a really heavy liquidation walk cloud at 1.30, so I wouldn't think beyond this level on the upside for the British currency.